Accrued expenses or accrued liabilities. Accrued expenses are expenses that have been incurred but not yet paid for. To put it another way, an accrued expense is paid after being recorded on the books. Every adjusting entry for accrued expenses debits an expense account, increasing expenses on the income statement and reducing net income, and credits a payable account, increasing liabilities on the balance sheet. Accrued expenses include the following: interest owed but not yet paid on borrowed funds, rent owed but not yet paid, commissions and royalties owed but not yet paid, utility and telephone bills owed but not yet paid, salary and wage expense owed but not yet paid. Many companies use salaries expense for employees paid by the week and wage expense for the employees paid by the hour. Property and other taxes owed but not yet paid. Failure to record an adjusting entry will have the following impacts on the financial statements. Liabilities will be understated on the balance sheet because the omitted entry increases a liability account. Expenses will be understated on the income statement because the entry increases an expense account, and as a result, net income will be overstated on the income statement. Buco pays sales reps a 5% commission on sales. Buco had 2019 sales of $500,000 but paid only $21,000 in commissions. How much does Buco accrue in commissions on December 31st? The adjusting journal entry is debit commissions expense $4,000, credit commissions payable $4,000 to accrue 2019 commissions. $500,000 sales for 2019 times 5% equals $25,000 commissions payable in 2019. $25,000 payable minus $21,000 actually paid equals $4,000 accrued commissions. On December 31st, Suco receives a $740 phone bill that it will pay the following month. What entry does Suco record on December 31st? Debit telephone expense $740, credit telephone payable $740 to accrue telephone expense. Nuco pays employees weekly on Friday, but 2019 ends on a Wednesday. If for the last week of the year, gross payroll is $10,000, how much does Nuco accrue for salary expense? Nuco must accrue 2019 salary expense for 3 of the 5 days, Monday, Tuesday, and Wednesday, which is 60% or 3/5 of the week. To compute accrued payroll expense, that is payroll expense incurred but not paid for the last week of 2019, $10,000 times 60% equals $6,000 accrued payroll expense for 2019. The remaining $4,000 of payroll expense for the week will be incurred in 2020. Nuco's accrued payroll expense is recorded with an adjusting entry in the General Journal as of the last day of the business year. Debit salaries expense $6,000, credit salaries payable $6,000 to accrue salaries at year end. Without this entry, the company's 2019 net income would be overstated because the expense would not have been recorded for 2019. Also, 2019 liabilities would be understated. Accruing interest payable. Interest payable is accrued in the same way as interest receivable. On a short-term note, the interest accrues or builds up and is usually paid along with the principal on the note's due date. On a long-term note, the interest is paid periodically, such as each month. If the accounting period ends before the interest is paid, interest expense is accrued on the last day of that period. The formula to compute interest for a period is principal or face amount times annual interest rate times fraction of year equals accrued interest. When a company gives a note to borrow money, the first entry is for the note. Debit cash, credit note payable to record note payable. Subsequently, interest expense is accrued with the following entry. Debit interest expense, credit interest payable to accrue interest expense. On November 1st, 2018, MECO, which uses a calendar year, borrows $100,000 at 12% interest. How much interest expense should MECO accrue as of December 31st, 2018, and how does it record the accrual on that day? To compute interest accrued as of December 31st, $100,000 principal times 12% annual interest equals $12,000 times 2/12 for November and December equals $2,000 accrued interest as of December 31st. The adjusting entry in the General Journal on December 31st is debit interest expense $2,000, credit interest payable $2,000 to accrue 2 months interest, $100,000 times 12% times 2/12. The interest expense is recorded as of December 31st because the expense is incurred, owed but not paid as of the last day of the period. DUCO has a 6-day work week and payday is Saturday. Weekly salaries are $12,000 and your company contributes to each employee's pension by contributing 3% of salaries to the pension fund account. Make the adjusting journal entries when the accounting period ends on a Tuesday. Debit salaries expense $4,000. Credit salaries payable $4,000 to accrue salaries expense. $12,000 weekly payroll divided by 6 days equals $2,000 per day times 2 days, Monday and Tuesday, equals $4,000. Debit pension expense $120, credit pension payable $120. $4,000 accrued salaries expense times 3% pension contribution equals $120 pension expense. Now, what adjusting entry, if any, do you record if the accounting period ends on a Saturday? If the work week ends on a Saturday, the company will pay salaries for the entire week, so no salaries accrue. Accrued expenses are expenses incurred before they are paid. Thus, no adjusting entry is recorded. Only an ordinary transaction entry is needed. However, pension contributions might accrue depending on the rules of the particular plan. Record the adjusting entries and any transaction entries on December 31st for each of the following. Number 1. On December 31st, 2018, FACO incurs wage expense of $8,000 for December 29th through 31st that has not been either recorded or paid. Debit wage expense $8,000, credit wage payable $8,000 to accrue wage expense. Number 2. Rent for December of $2,300 will be paid on January 2nd. Debit rent expense $2,300, credit rent payable $2,300 to accrue rent expense. Number 3. Of the $1,000 in commissions payable on December 31st, only $400 was paid. There's a transaction entry for the commissions paid. Debit commissions expense $400. Credit cash $400. There is an adjusting entry for accrued commissions. Debit commissions expense, $600. Credit commissions payable, $600. To accrue commissions expense. $1,000 commissions owed minus $400 paid equals $600 accrued. On December 1st, 2018, WICO, a calendar year company, borrows $30,000 on a 6-month 8% note payable. The interest is payable at the maturity date. Of the amount borrowed, $6,000 will be used to pay WICO's 2018 income tax when it files a return in 2019. Another portion of the loan will go to pay part of WICO's weekly payroll of $12,000 for the last week of the year. WICO uses a 5-day work week and payday is Friday. What adjusting entries does WICO record on Tuesday, December 31st, 2018? First, decide what adjusting entries there are. According to the data, there are 3 adjusting entries. 1. Accrued interest on the loan. $30,000 principal or face amount times 8% annual interest equals $2,400 times 1/12 for the month of December equals $200 accrued interest. Debit interest expense, $200. Credit interest payable, $200, to accrue interest expense. 2. There is accrued income tax, an expense that WICO incurred in 2018 but will not pay until 2019. Debit income tax expense, $6,000. Credit income tax payable, $6,000, to accrue income tax expense. 3. WICO must accrue 2 days' salary for Monday and Tuesday of the last week of the year. $12,000 weekly payroll times 2/5 Monday and Tuesday equals $4,800 accrued salary expense. Debit salaries expense, $4,800. Credit salaries payable, $4,800, to accrue salaries expense.